Hi world, this is Frugal Millennial, and on this episode of Finance Fridays, I'm going to highlight the difference between renting, buying, and show the third category, which is rentvesting, and why this could be an excellent way to live the life you want without any sacrifice. Before we get into it, please hit the like and subscribe button to the channel. Before I start, I should let you know that I'm not a financial advisor. The information in this video is for general information purposes only. I highly recommend you seek financial advice from a professional to double check the information I have provided here is correct. There's a common misconception that renting is worse than buying because it feels like you're paying someone else's mortgage, and that you should get a mortgage of your own and put money towards that instead. Although this does sound logical, it isn't always the case. Let's first look at the benefits between renting and buying. There are numerous benefits to renting compared to buying a home. 1. Live where you want. If you want a lifestyle close to the city and amenities, the rent is usually cheaper than a repayment of a mortgage that is paid with a 20% deposit. For example, this property in the inner suburb of Melbourne called Kew is currently selling for approximately $1.67 million. You would need $340,000 to make a 20% deposit. Based on this, the monthly repayment on a 20% deposit will cost around $5,536 per month, or $1,287 per week. In the past, this property was rented out for $895 per week. If you were to rent it rather than to buy it, then you are saving almost $400 per week. Point 2 ties in with point 1. If you don't like your neighbours, you have the freedom to move more readily, whereas if you own a home, it is more involved to move. The process of renting a place is less laborious than buying a home. Renting a house requires you to fill out a form and email it to the rental agent, whereas the buying process is more involved. I did a video on buying a house that you can check out, so I won't go into the process in detail. As a renter, you do not have to pay for the upkeep, repairs, nor outgoings. As a property owner, you have to pay for the maintenance of your property you have leased out. For example, the hot water system might break, that's a few $1,000s to replace. If the air conditioning stops working, that's another few $1,000s, and the money can really add up. On top of this, as an owner, you have to pay for council rates, water supply and sewage fees, body corporate, and property management fees. Being a renter, you do not have to worry about all the stress of property ownership, such as taxes, fluctuation in interest rates, fluctuation in property price, the additional cost involved when the property is vacant. If you miss a few repayments, there is also the repercussions such as repossession of your property, and these are just some of the things relating to the stress of home ownership. As the house prices are surging in Australia, as a renter, you also do not have to worry about going to inspections, putting in offers and then getting rejected, because the chance of that happening is quite high in this current climate. Renting also means you can test out the different suburbs before you choose to buy. Now, let's look at residential property ownership. The repayments you pay is going towards your own home. At the end of your property loan period, the house is yours, and you will not have to pay for the mortgage anymore. Furthermore, having a mortgage is like forcing yourself to save on a regular basis, and at the end, you have all the saving in the form of a home. You can personalize your property and renovate it to whatever color, style, and have whatever fittings you like. Compared to someone who's renting, you would need permission if you were to get the walls painted, for example. If you renovate your home, this of course will most likely add value to your house. Security of living in the same place. You don't run into the risk of being kicked out of your home like a rental property, and that means going through the hassle of finding a new property and moving everything from one place to another. Another benefit of home ownership is that you don't have to communicate with a property manager on a regular basis. In Australia, real estate agents have to do a walkthrough once a year, and in some states, once every quarter, to ensure that the tenant has kept the property in good condition. You can build your wealth through home ownership. Historically, the Australian property market has been on a trajectory that is going up. In fact, over the last 30 years, Australian house prices have increased on an average by 7.25% per annum. Having a property for 30 years will most likely mean by the end you will have gained capital through owning that home. That means if you bought a house today for around $300,000, your house could be potentially worth around $2.45 million in 30 years' time. Of course, I say that with caution because whatever the trend that has happened in the past doesn't necessarily reflect what will happen in the future. However, there is a downside to home ownership. You could be limited to certain areas or small places due to budget constraints. With the increase in property price, house affordability is on the decrease. People are constantly being forced further out into suburbs to look for their home because their budget has not caught up to the dramatic increase in price. That means you are more likely to be living in an area that's not your dream area and you're making compromises in order to buy a home. As the past half year has shown, the increase in demand and the lack of supply in the market means people trying to buy a property have to compete against a lot more people, and that is quite stressful. For a lot of people, home ownership means you are locked in for life. In fact, according to a finding by Royal Morgan, over 40% of Australians above 14 years of age have lived in their current home for more than 10 years. That means you'll be subjected to all the fluctuations of interest rate rises and price decreases. There's a third option that's trending around the world. People are rentvesting, or put it simply, renting where they like and investing to take advantage of both positive rental return and growth in property value. However, the majority of the time you would invest in an area that you would not normally choose to live in, as they tend to be undesirable and is further out into suburbia. With rentvesting, you are getting both the benefits of buying and renting as well as the negatives. The positive side of rentvesting is that it gives you more flexibility to live in the area that you want to live in. Because you have the ability to choose where you want to rent and the style of home you want to rent, you are instantly achieving your dream. I know rentvestors who travel overseas for a year. After their rent is up, they just put everything in storage and leave. This way, you don't have to worry about paying the mortgage for your home or having to try and find a tenant during the time you are not there. With rentvesting, you can get away with a small starting deposit. For me, this is the foundation of how I built my wealth. If you saw the reveal of my first property that I ever purchased, I bought that property for $220,000 with a deposit of $36,000. We did the renovations and rented it out for $310 per week, which is enough to cover the cost of a mortgage, plus rental management fee, and on top of this, I get to pocket some extra funds which goes towards my rent. Imagine if you had a few of these properties, then you could be paying no rent at all. I have put a lot of emphasis on this many times before. You need to buy positively geared properties with positive growth in order to generate enough money that can be put towards your rent. You can check out my video on how to find the right location to buy a property in order to make this happen. Rentvesting means that when you buy the investment property, as you're not living in it, you can choose a not so desirable looking home and do some basic renovations to make it more livable for the tenants. This will instantly increase the value of your property. Furthermore, this may be enough equity to be used on your next investment property, and so on and so forth. Again, this is shown in my first property reveal video. You can diversify your portfolio instead of putting all the eggs in one basket when you choose to invest. Let's go back to our Q property. If you could afford to purchase this $1.67 million property and you only purchase this property, you are putting all your eggs in one basket. On the other hand, you choose a similar price property to the one I first purchased, you can get around 7 properties of that value in various areas around Australia. The reason why you would want to split the value around in different properties is that you can mitigate the risk should property price fall. If this does happen, the dollar value of the drop is higher for the property in queue. But in our second scenario, where we have 7 properties, some properties will fall but others might not, and therefore the drop is less severe if you were to purchase one property alone. Furthermore, diversifying allows you to spread the negative aspects of property investment around, such as vacancy. If you have one of your $220,000 home vacant for a while, the loss is relatively manageable. But if you could not pay your mortgage on your multi-million-dollar house on time, this could result in the repossession of your house. You might be like, I could do all those things without renting because I could potentially live in one of those gross properties and work to increase my wealth from there. Let me tell you, I've done this, and this meant sacrificing my lifestyle and social life because I live in the middle of nowhere and saw nobody. There are of course cons of rent vesting, but I feel these are more manageable. You have to deal with both a property manager as a renter and an investor. I find this easy to deal with if you have a good property manager. Of course, if you don't have a good property manager, then it becomes a bit of a headache, in which case you can just quickly change to another. Dealing with bad tenants. If you are investing and you have multiple properties, you could be dealing with multiple bad tenants at the same time. You might feel like you are missing out on your dream home as people around you are buying into the area and driving up the price. But everyone suffers from FOMO, and if you really want to, once you have grown your wealth, you can sell a couple of your properties to buy your own. Of course, you would then have to pay the capital gains tax. Anyway, I hope you really enjoyed this video on rent vesting. At the end of the day, it isn't for everyone. For me, I realized I want to live close to everything but also be an investor, so rent vesting was the right choice for me. If you think I have missed a few pointers, comment below. I'm starting a new series where I profile suburbs. I have a lot of requests from people and there are some interesting towns on the list. If you have any requests, please comment below as I won't be checking Instagram nor Facebook messages anymore. Thanks for watching!